Good morning, children. Welcome back to Accountancy class. We are in third chapter, recording of business transaction first, isn't it? In this chapter, first we discussed about business transaction and vouchers, preparation of accounting vouchers that we already discussed in previous videos. Today, and one more topic we discussed in another video, that is accounting equation. So it's a related accounting equation. Today's topic is accounting equation. Related this one's few example and how this the help of few example how this accounting equation is creating that we are discussing in this video. Okay. Now we can discuss that one. Accounting equation. You know accounting equation, that is assets is equal to liabilities plus capital. This is a previous video in the detailed description I given related with accounting equation. So today I will explain only example how this accounting equation is created. That with the help of few example I will explain. So listen. Assets, that is a accounting equation formula. It's a assets is equal to liabilities plus capital. Assets is equal to liabilities plus capital. So in this case, assets, meaning of assets, what we have, so that should be equal to what amount contributed by the owner as well as outsider persons. That is, the claim of outsider is called liabilities, and claim of the proprietor is called, proprietor means owner, is called capital. So that must be both, that liabilities plus capital must be equal to the assets. Okay, what we have, what we purchase for that business. Example, furniture, land, building. These are the example for the assets. Machinery. These are the different examples for assets, isn't it? Liabilities case is example, bank loan. We took loan from bank, that is our liability. So we purchased goods on credit basis. That person we can call it as creditors. Our creditors also liability. Then capital, amount contributed by the owner, that is called capital. So assets is a two classification is there. That is current assets and non-current assets, that also we discussed. That is deferred revenue expenditure also there, that we can discuss it later. So here so simply we can say assets case current assets and non-current assets. Current assets means assets, it's we can use within the period of this 1 year or within the operating cycle, we can use that asset, that is called current assets. So example, that is cash in hand, cash in bank, debtors. What is the meaning of debtors? Example case is debtors. Suppose our business, our business case, we purchased, we sold goods on credit basis to our customer. Suppose one of the customer named Mr. X purchased the goods from our business. That means we sold goods to Mr. X on credit basis. So that X is our debtor, isn't it? So our asset, within few months that amount we can collect from Mr. X. So our debtor, X is our debtor. Then creditor is the liability. Creditor means when we have purchased the goods on creditor from our supplier. Then suppose Mr. Y is our supplier. He is selling goods to us on credit basis. That means our point of view, we purchased goods from Mr. Y on credit basis. Then Y is our creditor, liability. We must pay that amount within specified period of time. So that is debtor, creditor. Debtor is asset, creditor is liability. Okay. So here in this example, X is a debtor, Y is a creditor. Okay. Next same liabilities also two types. Then here assets cases I told two types are there, current assets and non-current assets. Current assets is short period only, we can use that one. Then maximum 1 year within the operating cycle. So operating cycle meaning is so if you buy purchased raw material, then this raw material converting into this finished goods. Then after this finished goods are sold in the market, then after that if we sold in credit basis, then after collecting this cash after a few periods of time only. So this full process covering certain period is there. So what long time we took for entire this process. That is called our operating cycle. That is suppose first we purchased the goods, raw materials. Raw material we purchase, then the raw material converting into this semi-finished goods. Then this semi-finished converting into finished goods. Then this is a packing. Then it is a transporting to the different place of warehousing or storing. Then marketing this product. Then after marketing, sometimes on credit basis. Then this seller certain time he want to wait for collecting that money. So this cash, first you spend money for purchasing raw material, cash spender. So last cash is collecting to the business. So that period is called the operating cycle of the business. So that may be 1 year or 1.5 year, whatever it is. Sometimes 9 months is our operating cycle. So what is the expected time we are taking when we spend money and when we can collect that money? This period we can call it as operating cycle. So that is the point. So now it is we are identifying current asset or non-current asset. We are thinking like this. So with the assets which can be used within 1 year or within the operating cycle. Okay. So that is our current asset. And best example, cash in hand, cash in bank. These are the current assets. Stock, that is stock means closing stock. That is our current asset. Debtors, current asset. Then next same is liabilities. So before that non-current asset is there. Non-current asset means more than 1 year or more than operating cycle we can use that asset. That is for long period it is using. Then it is called the non-current assets. Example, furniture we can use for many years, isn't it? So like the building, land, machineries, this we can use for many years, and with the help of these assets definitely this operation, through that operation basis we can earn revenue to this one. So with the help of machinery we can earn more. So this will contributing amount to our business. That is called non-current assets. Okay. So long period we are using that one, non-current assets. Next, liabilities, also current liabilities and non-current liabilities. Here payment within this 1 year or within this operating cycle, then that type of liability we can call it as current liabilities. Example, creditors, definitely we want to pay within this short period of time. Okay, so to the supplier, creditor is our supplier. Creditor, we purchase the goods on credit basis. So that who is the supplier of that items, we can call that person as a creditor, isn't it? So creditor is a current liability. Next, short-term loan. You took loan from bank for a short period, that is for 3 months or half a year, 6 months case, 1 year maximum. Within 1 year, definitely you want to repay that amount. Or we can say within the operating cycle or within 1 year should repay that amount. That type of liability we can call it as current liabilities. Next one is non-current liabilities. Another classification within non-current liabilities, definitely repayment cases. We should take more than 1 year or more than operating cycle. That it is called non-current liabilities. Okay. So anyway, we can say we can combine. It is called that is current liabilities plus non-current liabilities. That is liabilities. So total liabilities plus what amount contributed by the owner, that is called a capital. So these two amount must be equal to this total assets of the business. That is the accounting equation. Okay. So every transaction, this two-fold effect is there. So one giving aspect and taking aspect. So that is a debit aspect and credit aspect is there. So each and every transaction has two-fold effect. That is a debit as well as credit aspect. So that way we are classifying these transactions. Okay. So now we are with the help of that we can debit credit we can discuss in coming videos. So now our consideration is how this accounting equation is formed. That's only. So with the help of your example, I will explain that. First one is so here I am using this NCT's textbook examples only. So that is which will help you to understanding more when you are reading the textbook. Okay. So one question is there, that is Rohit. So Rohit started business business with rupees 5 lakh. Okay, so here what is the amount he contributed? That is rupees 5 lakh rupees. That is Rohit started business with rupees 5 lakh. So 5 lakh is the amount he contributed in the business, isn't it? So who is the proprietor here? Rohit is the proprietor, contributing certain amount, 5 lakh rupees contributed in the form of cash. Isn't it? Rupees in the form, that is in the form of cash he contributed. That is 5 lakh rupees. This is called one transaction. Okay, this is one transaction. This transaction has here two effects are there. So minimum two effects are there. So here two effects means one is cash aspect and second one is capital. In this transaction, two effects is there, cash and capital. What is this cash here? Cash of rupees 5 lakh rupees comes to the business. So please, when you are doing this transaction or identifying thing, this you should keep one point in your mind, that is entity principle concept. That is the entity principle you should keep in your mind. What is that entity concept? That is business separated from its owner. That is owner and business entirely you define the one. So that is that concept you should keep in your mind. So entity is very important. So here business entity. Here business entity means business. Business is separate from its owner. So when you are doing the accounting process, from the accounting point of view, always thinking what happened to that business only. Don't think in whose point of view, owner's point of view. Don't think only you think in business point of view. So that's a point in accounting. When we are doing this accounting, that cases are always think in business point of view. So business. So owner different, business different. So what happened to that business? Only think in that much. Okay. So here now don't think this is point of Rohit case is limit, but Rohit is a proprietor. Okay, but what happened to this business? Two things happen. There is a cash comes to the business from whom? From Rohit. From Rohit, cash comes to the business. Yes or no? Rohit deposited 5 lakh rupees in that business means business point of view in the accounting process. What do you want to think? Business case is a cash receipt. So here cash receipt. Oh, cash we can see increased. But previous balance is zero, nothing. So now what is the total cash? So cash is here 5 lakh rupees. Okay, cash increased by 5 lakh. So this is called a asset. Cash is a asset. Yes or no? Cash. In business point of view, cash is our asset. What type of asset? Current asset. Cash is a current asset. Why? This is a circulating. It will go. It will not be used for a long period. That is a very short period. Very liquid item is cash. Cash in hand. Okay, cash at bank is the secondary one. So first cash in hand. First we are using that only. So cash in hand, that is assets. So asset one side it is increased. Now another one is capital. Second I told that is capital. Capital means the amount contributed by the owner. So business point of view or accounting point of view, so owner contributed anything. Yes, owner contributed rupees 5 lakh in the business. That contribution is called capital. That is a claim of the proprietor is called capital. So in business point of view, this is the liability towards the owner. Isn't it? This is the liability. So two types of liabilities here is there. So actually two types of liabilities are there, current liabilities and non-current liability. But here toward a business point of view, proprietors one liability is there, outsiders case is a liability is there. So proprietors liability that is called capital and outsiders case is a simple liabilities we used. So here capital is the liability towards the owner. So such point of view, this is the liability. So we can say this is the liability, but liability is separate. Outsiders cases, this is the outsiders claim is called a liability. This is the proprietor's claim, that liability is called a proprietor's case, that liability is called a capital. So here capital is a it will come here. So one item, amount contributed by the owner, that's only the capital. So it is adding to the capital. So if you are forming, this is the accounting equation is also called the balance sheet equation. Balance sheet equation because this is actually depict the position of this balance sheet only. So that's why this is called the balance sheet equation. So how this balance sheet is affected? Otherwise we can create a table like this. So like this we can create here assets in one column, here transactions, assets, here we can write liabilities plus capital, isn't it? So here assets equal to liabilities plus capital. What is the transaction? Transaction number 1, that is Rohit started business with rupees 5 lakh. Okay. So one side, that is, which is the assets one? Cash. Second one is liability, that is in liability side what is that? Capital. So here we can write assets is here, name of that assets, that is we can call it as cash. So many assets will come, so one by one we can create. So this is a cash one. So cash increased or decreased? Cash increased in the business, so plus sign. If it is a decrease, then minus sign, but don't give minus, instead of that you have to put that amount in bracket. Bracket indicates the minus. Okay. So here cash, in always think in business point of view only. Rohit deposited 5 lakh in the business means 5 lakh rupees increased in the business. So cash increased by 5 lakh rupees. So I am writing in 5 cash column 5 lakh. Okay. Second aspect is capital. So Rohit contributed amount means that is called capital. So one side capital, one side cash. So one side that is business point of view liability, one side it is cash received. So this is liability side, no liability, so we can put this CO, no liabilities here. But a capital column, what is the capital? So if any liabilities will come, then we can write the heading of the liability. Here capital is there, that is name of the capital. Capital is increased or decreased? Amount deposited in the business. So capital increased. So plus sign. So 5 lakh. Okay. Now this is the two-fold effects posted. Minimum 2 effects will come. So this one is in cash, one is in capital. So anyway, we can find the accounting equation. Assets total is 5 lakh, capital total also 5 lakh. So assets is equal to liabilities, new equation. So okay, so new equation if you have forming cases, here assets is equal to total is 5 lakh. This is a new accounting equation. I am writing the short form accounting equation. Accounting equation is 5 lakh, here 5 lakh, okay, here no other assets is there, liabilities is 0, here plus, this capital is also 5 lakh. This is accounting equation. 5 lakh equal to here 5 lakh. Assets is equal to liabilities plus capital. Liabilities is here 0, 0 plus 5 lakh, 5 lakh. So anyway, assets equal to liabilities. Okay. Next one example it is given. This is open a bank account in State Bank of India with an amount of rupees 4,80,000. Open a bank account in State Bank of India with an amount of rupees 4,80,000. 4,80,000, with the help of 4,80,000 you open one bank account where in State Bank of India. So transaction number 2, open a bank account with an amount of rupees 4,80,000. Open a bank account, but name of the bank is given State Bank of India. Okay, that is any bank case. So open a bank account with an amount of rupees 4,80,000. Here what are the effects? What happened to business? This transaction case. In this transaction, accounting in the accounting point of view. So always you think in business point of view. So that means what happened to that business? Okay, business cases, business point of view, one new account open in State Bank of India. That means when you are opening a State Bank one account in this bank cases, definitely your money is deposited there. That is your money, your asset, isn't it? But just you deposit that money in your bank account. But your bank account is your asset. For this year amount deposited is 4,80,000. So open a 4,80,000 account, meaning is you deposit 4,80,000 in your name only. That's same cases. The business started this open a bank account with an amount of rupees 4 lakh. The name of business, one account open at State Bank of India. So in such cases, business point of view, 4,80,000 cash balance occurred in bank account, isn't it? So one side increase bank account. Increase the bank account by what amount? 4,80,000. And second aspect, anything, any point. What happened to business? You already have a cash in your hand. That is business point of view. 5 lakh rupees in your cash balance. Out of this 5 lakh rupees, okay, you open a bank account 4,80,000. Out of 5 lakh, you taken 4,80,000 and deposited in bank account, isn't it? So one of the asset is decreased, another asset is increased. Which asset is decreased here? Cash in hand is decreased. Understood? Out of 5 lakh rupees, took 4,80,000 deposited in bank account. That means from cash 4,80,000 decreased. So second is here decreased cash in hand. Cash in hand decreased by 4,80,000 rupees. Clear? So this actually bank account balance and cash in hand, these two are assets. Both are current assets. But in both are affecting in asset side only, not in liabilities or capital. So but one asset is increased, another asset is decreased. Clear? So in such a point of view, so what we can write it here about the equations cases. So now double line here. So second transaction, what is the transaction? Open a cash increased or decreased? The cash in hand decreased. So here 4,80,000 rupees decreased. Decreased the symbol is a bracket. That means you should minus that one. So I put in bracket. And second one is increased bank account. Bank account balance is our asset. So here assets, one of the asset is cash, another asset is bank, another column. Okay, so what amount is in bank column? Increased the bank account by 4,80,000. So here what you will write here? Increased 4 lakh. Don't write here or there. Correct second one, second transaction, correct position you want to write 4,80,000 increased. So plus sign. Okay, but it is not affected in liabilities. Liabilities is not affected 0. So capital also not affected 0. Okay, not affected anywhere. Clear? So here I am closing this one. So then you can create a new account. So here I am closing like this. So again you will get the new accounting equation. New accounting equation cases this old accounting equation plus a new transaction. Don't compare this one, this plus this. Okay, what is the effective? 5 lakh minus 4,80,000, 20,000 cash balance only now in your hand. Then bank balance is 4,80,000. No other transaction here. So that must be equal to, check it, equal or not. Okay. Liability is 0. Then capital 5 lakh. This is 5 lakh. This is a old accounting equation 5 lakh. Compare with this new transaction. New transaction 0. So 5 lakh plus this is 0. So 5 lakh. Okay, so here also it is close like this. First transaction, so you are closing. Then this 5 lakh, this 4,80,000 adjusting, 20,000, then 4,80,000. Here 5 lakh. Equal or not? So check it. This is the here, the written here. So 4,80,000 plus 20,000, both are assets. Okay, both are assets. So cash and bank asset. Take the total 4,80,000 plus 20,000, 5 lakh is equal to liability 0 plus this is capital 5 lakh. So 5 lakh is equal to 5 lakh. Okay, is clear? So now you are writing again third one. So what is the third transaction? Third transaction, that is bought furniture for rupees 60,000. And check was issued on the same day. What purchased? Furniture purchased. Furniture purchased for, that means bought furniture for rupees 60,000 and check was issued. Furniture for rupees 60,000 and check paid on the same day. So here, so check the paying on saying check issue. Check issued on the same day. So both furniture of rupees 60,000 and check issued on the same day. What purchased here? You purchased one furniture. Purchased one furniture for rupees 60,000. Cash paid? No, not cash not given. Check given, check issued. Check is related with the bank, isn't it? So it is affected in bank only. So bank account, from the bank account balance, it is automatically will deducted. So check is connecting with the bank account. So definitely here what are the transfer? How many effects are here? Two-fold effects only. One is furniture purchasing time. You purchase the furniture, thinking whose point of view, business point of view, furniture comes in or goes out. So furniture comes into the business. So that is a asset is increased in your business. Furniture is our asset. Isn't it? Long period we are using. That is our asset. One of the asset is increased. Okay. So asset. So one of the effect is increased asset or otherwise increased furniture. Actually furniture is our asset. Which asset increased? Furniture asset increased. And second effect is what happened to this? What paid? Cash what paid? Check given, check issued. That is affected in bank. So decreased bank balance. Decreased bank balance by rupees 60,000. So furniture value is 60,000 increased and decreased bank balance by rupees 60,000. Twofold. One comes in, furniture comes in, but our bank balance is decreased. But this decreased bank is also our asset. Yes or no? Bank balance is our asset. So it is furniture also asset, bank also asset. Both asset is decreasing. So one asset is increasing, one asset is decreasing. But both are affecting in asset side only, not in liabilities or capital. Okay. So here you can write both furniture and issued check. So here what are the twofold effects here? This cash, no, it is affecting cash, no, zero. Is it affecting in bank? This due to this transaction? Yes. What happened? Decreased or increased? Decreased. So decrease is simple, so put in bracket 60,000. Okay. Then second one, furniture, that also asset. So you write here furniture. Okay. Your furniture increased by value is 60,000. Don't write it here or there. Correct. Third transaction nearby you will write. Same line. There are no liabilities affected, no capital affected, like this. Okay. Proceed. So then take the total. 20,000 cash balance. This compare with this one only. Don't compare with the previous one. New accounting. This is called a new accounting equation. So this is previous new accounting equation plus current accounting. The current transaction. 4,80,000 minus 60,000. 4,20,000. Okay. And here 60,000. Here 0. New accounting equation. Here 5 lakh. So check the asset is equal to liabilities plus capital. There that side is, this side is a total 5 lakh balance. Here it is 20,000 plus 4,20,000, 4,40,000. 4,40,000 plus 60,000, 5 lakh. So total asset is equal to 5 lakh. This one liabilities plus capital so equal 5 lakh. So assets equal to liability. This way you have to write accounting equation. Okay. So remaining we can discuss in the next video. So just a few things only I explained. So please complete up to this. Okay. So remaining transactions are there that we can discuss in the next video. Okay. Thank you. Bye.